Hey guys, what you're about to watch is a 10-minute video on how to budget for your business so that next financial year is your most profitable one yet. So I've been having a lot of conversations with business owners over the past couple of months, and a lot of it's been connected around profit and how they may or may not be making the profit that they desire, or they may or may not be even making profit at all. And I'm having the same conversations with a lot of people, and I thought it would be a good idea to put down something on video that may help them and obviously may help you to best understand my budgeting process. And then maybe you can take some of this into your business and use it for your budgeting. Now, I need to be very clear, this is not financial advice. I'm not an accountant, I'm a business owner. If you are concerned about your budget or you're concerned about your business, I strongly advise that you reach out to a professional who does this for a living and pay them for their advice. So, let's get into it. So, I'm going to work with a $100 budget or $100 of sales for the process of this, so that it's best, so it's easiest to understand. I will be working excluding GST. So imagine you have sold $110 worth of goods, including GST, for this benefit or for this purpose, and then the GST is being removed, and so we are dealing with $100. So all of my budgets are excluding GST. We have $100 of turnover. Now, at the bottom, we want our profit here. Now, it depends on the industry that you're in, but a safe and sensible profit before tax number is about 10%. So for the purpose of this budget, we'll be working on $10. So at the end of your financial year or your month or whatever period you're budgeting for every $100 you sell, you would expect to have $10 left in your bank account that you can then pay the government tax on and then use the rest as profit for yourself. Now, for an inventory-based business, which mine is, it's not unreasonable to expect a gross profit of around 35%. It could go as low as 30, it could go as high as 40, and look, to be honest, it could probably go as high as 45 if you own your own brands, or if you have exclusive buying arrangements, or you bring in your own stuff from overseas. But what I'm putting on this board today is an elastic budget. It's flexible. You're able to use the concept and put in your own numbers. And I really would suggest for you to get this into Excel and start playing around with it. I will do a detailed deep dive into our budget or into a budget and cover everything. But I think at a really high level, you need to understand this first before you start going any further. So if we sell $100 worth of products and our gross profit is $35, we will have $65 of that is going out to being cost of goods. So that goes off to a supplier and it's paid, and then you never see that again. What that leaves us with is $35 or 35%. Now, we've already established that we want to make $10 profit from our total year of sales. So the difference between that is $25. So this area here is all of your costs, and it cannot go higher than $25. Now, the biggest component of your $25 for a lot of businesses is going to be wages. So our wages move around between probably 16 and 21% of our total turnover, depending on where we're at, and depending on what you choose to include in your wages. So for us, our wages include payroll tax, which is a stupid tax our state government charge if you're too successful and you have too many staff. It includes a return to work, which is work cover. So it's in Australia what we pay to ensure the safety of staff. It's kind of like an insurance on anyone getting hurt and helping them re-enter the workforce. So for the benefit of the budget for what we're doing at the moment, I'm going to make this 19% or $19, which only leaves us $6 or 6% of our total turnover to play with to pay everything else. And you already can probably start to see that this starts to get quite tight. So the next thing I'm going to put here is rent. At the moment, I think we're paying about 2.5% rent, or $2.50 in every $100 that we sell is covering rent. We are high at the moment because we've got a building that we're not using, so 2% is a number that I've always enjoyed working towards. And when I purchased railways one of the main focuses for me was to get my rent down into that 2% bracket. It sits at around 5 at the moment, and I'll explain further into this why that's a problem. So we had 6, what have we got? So 3.5% left. Now that 3.5% is going to cover a lot of the smaller things that come into your business. So marketing, depending on your business, you might have a 1% marketing budget, you might have a 2% marketing budget, you might have a 3% marketing budget. It really depends how you allocate your marketing and whether or not you consider a business development manager a marketing cost, or if you consider, a corporate box marketing cost, or if you consider just, legitimate media costs as your marketing costs. Now, everything else underneath that, depending on your business, is probably going to be under 1%. Our IT budget is probably close to 1%, so I'm going to put that in there as well. Now, we've got 19, 20, 3.5. So we've only got 1.5% left to cover things like fees and charges from banks, subscriptions for software, consumables, accounting fees, legal fees, anything else that might come up, all needs to fit into that $1. Now, the advantage of doing this budget now at the start of a financial year is to give you every opportunity to identify any potential chances that you're going to have to make more money or to avoid making less money. Because if we start adding more costs in here, imagine we find that, loan repayments, right? This is something that very rarely gets put into the top of the budget. It's usually afterwards. Our accountant wouldn't recommend that we put it here, but you might be financing, so we've got, arguably $5,000 a month of loan payments. You're getting close to 1% here, right? Now, as soon as we go above that 25, and that's what 19, 20, 22, 23, 24 and a half. So we're now 0.5% higher than our budget. So all of a sudden, we're now at 9.5. And the more we get shoved in here, the less we're going to have down the bottom. And if you get to a point where that bottom becomes 0, that's when you're in trouble. And doing a budget now will give you the opportunity to make those changes. So what can you do? 1, you can reduce some of your costs. Now, there's going to be a lot of fixed costs in your business, like your rent, that you can't do anything about. But you might be able to reduce your marketing budget. You might be able to reduce your IT budget. You might be able to negotiate with your insurance providers, your electricity providers. You can play with wages a little bit, but most of the time that's going to come down to either having casual staff work less or having less staff. And this is probably one I don't mess around with too much. For us as a business that's trying to grow, we're looking for long-term commitment from our staff. And so in return, I want to give our long-term commitment back. Or you make this number bigger. So you negotiate deals with your suppliers and you try and get your GP up. So I know that one of our competitors, who's a national, they chase 45 up here. And the goal of them chasing 45 up here is not so that they can give their staff more, it's so that they can have 15 down here. So this is a very, very high level budget for you to play with as an individual, for your household, or as a business. And if you can get it all in, understand for every $1 that you bring in or every $100 that you bring in, what goes out, then you transfer this into an Excel spreadsheet and divide it out evenly across all the months, and then have a really honest conversation with yourself and your staff as to whether or not they think it's realistic. Because, so what we will do, say WaterPro is budgeting to do $10 million this year, all we're doing is we're pushing this out to 10 million, is that right? And then everything else follows. So we're gonna spend $6.5 million on stock. We're going to then have $3.5 million left to pay for all of the things that we need. So we might spend 19 to, I think we'll probably spend, for that we'd spend 1.9 to 2.1 million dollars on wages. And the whole point of it is down here that we have $1 million profit in which to use to pay taxes, and then to have a investment in safety and security in the business. If you don't understand how to get to this number from a sales standpoint, I'm going to quickly cover that off. So with profit, it can quite often be confused that the difference between profit and margin. So for us to have $100, when we sell $100 worth of something, if we want to have a 35% or $35 of gross profit, so profit before costs, we can't get that by adding 35%, right? For example, if you have a product that costs you $50 and you add 100% to that, so it's 50 plus 100% of 50 is 100, all of a sudden that's 50% GP, right? Because 50% of the cost of the sale goes back to paying for the stock, and the remaining 50% is profit. So 50% of the total sale is profit. It's really important to get this right, because a lot of people can be running these budgets and they've got this beautiful budget, and then they take it back into their day-to-day operation, and they go, well, we've got all this stuff happening, we've got a $200,000 job, we're going to add, what do we need to make? 35% to that, right? And all of a sudden, that, as 200 plus 35% will actually probably give you a gross profit of something like 28 or 27. And then all of a sudden, if that's 27, that's 25, you make 2. I hope that's been of help to even one of you out there. If you want me to do a real deep analysis on our budget, I'm happy to do it. Just hit me up in the comments and let me know. Obviously, I'm operating 3 companies, so to spend time on this, I enjoy doing it, and I'm happy to help. And I think that if the world can have more people trading solvent, then we're going to have a better world. But also, for me to do a video like that could take 2 or 3 hours. So if you're interested in it, I'll do it. If not, this might be enough. Make sure that you're starting to think about this today so that you're prepared for the financial year that comes. And then when you get to the end of the financial year, the most important thing you can do is review the year that was against the budget that you did and see how you went, and also be looking at this regularly. Don't get to the end of the financial year and realize that wages went up and that you're now paying 2.8% wages. Sorry, what was it? 20. So say you don't want to get to 28% wages because you've had increases in government wages have gone up, or you've had too many staff. If that, you want to pick that up in the month that it happens, so that you can make adjustments throughout that month, so that by the end of the financial year you're in a really good financial position. Thanks for tuning in. If you've got any questions or comments, feel free to hit me up in the comments section or send me a DM. I enjoy talking about this, and I'm happy to help, and I hope this makes someone's life better.